Okay. Great. So yeah, we're going to spend a lot of time. So we basically went over that. Now we're going to spend a lot of time on this. Okay, so basically when we calculate payroll, how are we going to calculate payroll? So we now learned about mostly the, it looks like I skipped the first 15 minutes of today's session, but that's just about payroll administration. You can go ahead and if you're studying ICD, you can read up on that in your textbook. If you're studying any other course, it just says that there's got to be, most companies have a whole division that works with payroll, and they've got to administer, and they've got to keep records, and so on and so on and so on. I covered it in 2 minutes. Okay, cool. What I want to get to is I really want to get to the stuff that students struggle with today. So I'm going to help you to work out payroll, and we are going to do some examples. And when we do the examples, I'm going to urge you to take a pen and paper and do it with me. It's no sense you just looking at what I'm doing, because you're not going to learn. The way you learn is you have to do it by yourself. But before we study, before we go for it, a lot of people say mathematics is not theory. It is just practice. That is a load of bollocks. Mathematics have a lot of theory, which you have to study. And then you can put it to practice. Now, just as mathematics is not just practical, it's theory as well. We have theory in payroll as well, which you need to know before we can put it into practice. But believe me, the more you put it into practice, the more you're going to remember the theory as well. Okay, so it's kind of a win-win. Okay, so the first thing, this is the framework that you are going to use when you are calculating your payroll. Now, first of all, I need to say, what is payroll? Is pay as you earn. PAYE, pay as you earn. What is that? Pay as you earn is income tax. So do not be weary, or do not think that your employer is deducting pay as you earn, and at the year end you need to pay income tax, and in the end we pay that, and in the end we pay so many taxes. We pay the tax on petrol, and anyway, pay as you earn is income tax. It's just a way of the receiver collecting that income tax. Rather than waiting for year end to collect your income tax, the receiver collects your income tax monthly via the PAYE system. Or rather, the employer holds it back from your salary, pays it over to the receiver. The employer gets no benefit from that, but as an employer, they have to do it. It's law. Okay. It also takes the burden off you. Just think of the fact that you earn a latest salary of 20,000 Rand a month, and now comes year end, and now you have to suddenly pay tax on all that 240,000. So that's a big lump sum. Especially when you're 240,000, you're working at 18%. So you can work out what 18% of 240,000 is. Let's say it's close to 20%, which means it's close to 48, around about 45,000. Imagine if you had to pay that in a lump sum. So PAYE is a convenient system, both for the receiver to get their money on a continuous basis, but also benefiting you as an employee because you are spreading your liability over a whole year. I mean, if you pay 1,000 Rand or 3,000 Rand every month on a big salary, it doesn't have that big impact. But if you have to take all this 3,000 Rand which you pay throughout the year, it's going to work out to 36,000 Rand, which you now have to pay in one lump sum. So it's actually, I think it's a better system, because I would rather pay off something over a year than having to pay it off at one lump sum. Because believe me, if you're studying at the moment, or if you're a full-time working person or whatever, you will know that the money disappears. As soon as you get it, it disappears. Even though you have the intention to save it, it disappears. Okay, I don't know where it disappears to, but it does disappear. Okay, if you understand that, then you will be appreciative for the PAYE system. Okay, now PAYE works a little bit different than income tax, only in the sense that at year end, when you do your form submission, you can deduct. It's worked out a little bit differently. It's not that it's not going to benefit you. It's just that, let's say, for instance, you get a travel allowance, you can deduct more. You can deduct physical expenses at the end of the year, whereas monthly you cannot deduct that physical expenses, but you get taxed on less. So the Minister of Finance and all of these smart people has worked it out, and yeah, great. So every month you get what is called your remuneration. Remuneration consists of three things, and this, whichever textbook you might be studying, this is probably not in the textbook the way I put it out here. This is my understanding, and it's everything that's in the textbook, but it's put into a nice package as to my understanding. So the first thing you get is you get your remuneration. Your remuneration, according to me, not according to the textbook, according to my interpretation of the textbook and all the theory that is in the textbook, it can be split into three: cash, allowances, and fringe benefits. Cash is physical money that you get. Allowances is something that you get that you have to use for a specific purpose. So in the first one, you get your cash income. If I get 20,000 rand a month, I pretty much can do with that what I want. Okay, that is what I mean by cash. If I get an allowance of 500 rand for a cell phone, then I am expected by the employer to have a cell phone contract and to use that 500 rand for that. So let's say, for instance, you get a medical aid allowance. You are expected to use that allowance toward a medical aid. And then you get fringe benefits. And fringe benefits is things that you get a benefit from the employer, but it's not in cash. You don't have to pay for it. You get the benefit, but there's no payment involved. Or sometimes there is payment involved less than the actual value of the benefit. This is, for instance, like the use of a company car. If I get the use of my, or the CEO gets the use of the company Merck, then the CEO is not paying for it, but according to SARS, he is getting the benefit from it. And because he gets a benefit from it, he needs to be taxed on it. And that's what's called the fringe benefit. I see you frowning. That's how a fringe benefit works. A fringe benefit is you get the benefit without paying, but the receiver says, no, that's not fair. You cannot have the benefit without being taxed on the benefit. And that's what a fringe benefit is. So all of those three things is included in remuneration. Your cash income, your allowances, and your fringe benefits. We will look at them in a little bit more detail later on. Then you get what is called allowable deductions. Now, allowable deductions for an individual, there's only two. The first one is your retirement deductions. Retirement deductions. This is what is commonly known as pension fund, provident fund, and retirement annuity. And previously, there was all kinds of rules for all of these things. For all of these things, at the moment, they've simplified it, and they've basically said you can get your physical retirement deductions up to a limit of 27.5% of your remuneration. Okay. So if you pay 300 rand towards retirement, then you can only deduct 300 rand. But if you pay 300,000 rand to your retirement benefit, then you can only deduct the amount that is limited to 27.5% of your remuneration. Okay. There's other things that you have to work out there as well, but that's common to 27.5%. Okay. Donations, you can deduct donations if you donated to a public benefit organization. It has to be a public benefit organization that is registered as such. Okay, and then you can deduct 5% of your income just before the donation. So your remuneration, less your retirement deduction, you can deduct up to a limit of 5% for donation. After you've deducted all that, you get your balance of remuneration, and your balance of remuneration is what your PAYE is going to be based on. Your PAYE is then worked out according to the tax tables, which I will show you. Tax tables change every year. So make sure that when you do a question, you take note of when the tax year is ending. Tax year for an individual is always 1 March to 28 February the following year. At the moment, we are in 2023 tax year. Okay, which means the year that the tax year ends is the year that we're in. So this tax year will end on 28 February 2023. So we are in the 2023 tax year. Every tax year, these 3 things change. They change. And they usually can change for the better. Okay. They usually, I haven't seen in my whole existence, I haven't seen taxes change for the worse. I'm talking about tax rates and that sort of thing. I'm not talking about petrol tax and VAT and all of that sort of thing. That's totally different story. But usually, the tax rates and the rebates changes for your benefit every year. Okay. So then we take our balance of remuneration, we work out our PAYE, then we work with our rebates. There are 3 rebates, and you might fall into a category for either 1 rebate, 2 rebates, or all 3 rebates. The first rebate is a primary rebate. All natural persons get a primary rebate. If you're 1 month old or 999 years old, you get a primary rebate. Okay. I see here in class people are smiling for my jokes. I hope you at the host is having a little laugh as well. Okay. Second rebate is if you are 65 years and older, you get a secondary rebate. Primary rebate was the first one. Second rebate is the second one. If you are 65 years or older, you get a primary rebate for all natural persons, and the secondary rebate because you are now in the prime of your life. Okay. If you are 75 years or older, you get another rebate which is called a tertiary rebate. Okay, because you are now in the golden ages. Okay. So yeah, primary rebate, everybody. Secondary rebate, 65 and older. Tertiary rebate, 75 and older. That means the threshold on before you pay tax. There is a threshold. I'm going to get to that threshold and what I'm going to show you. That means up to a certain stage, you don't pay tax at all. And then from there on, you pay tax on a sliding scale. Which means if you earn 2 million rand a month or 2 million rand a year, your marginal tax rate is 45%. But that does not mean you pay 45% tax. Your effective tax rate is actually much less because you work in a sliding scale. For this amount, you pay 18%. For that amount, you pay 26%. For that amount, 31%, and so on, up to 45%. And that's why people make the mistake. They say, oh, I earn like a salary, but half that salary goes to tax. I promise you, it's not half the salary that goes to tax. Not income tax anyway. When you work out all the other taxes, then it might be. Okay, then we get to what is called our tax credits. And at the moment, there is only one tax credit that you can take on a monthly PAYE, and that is your medical aid tax credit. Your medical aid tax credit works in such a way that you get a credit for being on a medical aid. The government sees it as good practice and for health and whatever to be on a medical aid. That's where you get the deduction as well. You don't get it just because it's so nice to have it. You get the retirement deduction because government says it's a good thing to plan for your future. So they give you the deduction. They make it, you don't have to do it, but they make it beneficial for you to put away money for your future. Okay, same here. They say it's good to look after your health. So they make it beneficial for you to be on a medical aid. Don't have to be the top plan. It can be a hospital plan, but they make it beneficial to be on a medical aid. Remember, it's got to be a registered medical aid. It cannot be a medical insurance. It's got to be a medical aid that is registered with, I think there's a Medical Aid Act or something. Okay, cannot be medical insurance. And then you get a tax credit, and that also changes every year. The way it works is you as a member get a certain amount. At the moment, it's 332 Rand per month. The first dependent gets the same amount, 332 Rand a month. Each dependent after that, you get a deduction of 224 Rand per month. So if there is the member plus 3 dependents, then it is 332 times 2 plus 224 times 2. That's per month. So you multiply that by 12 for the year. Okay. Then we get a PAYE deduction. Now this is all nice, it's a calculation and everything, but this is not, well, your payslip is going to look. Your payslip is going to show your income and tax in cash, physical money that you receive, your allowances. It's not going to show your fringe benefits. And then it's going to deduct your PAYE. Okay. It's also going to deduct your retirement contribution, your retirement contribution, the part that you pay, because the company holds that back and pays it over to the third party. For instance, we are on, don't even know what the name is, but anyway, they hold it back, PPS, I think. They hold it back and they pay it over to them. Okay. So that's a deduction that comes from your payslip because, okay. And then they deduct UIF. And UIF is the unemployment insurance fund. You remember when I spoke about maternity leave and paternity leave and all of those leaves? You can claim from them. Unemployment insurance fund, you can also claim from them if you are without work for a certain reason. But it does not include
You resign.
what do you call it if you quit?
You resign.
You cannot resign and then go on to UIF. But if you are without work for some reason, like you were retrenched or something like that, you can go on to UIF. And then and that's 1%. By the way, the employer pays another 1%. You will also know about the thing called Skills Development Levy, SDL, which you will not see on there because you do not contribute to Skills Development Levy, only the employer contributes. And then you get your net pay. And this is the amount that will be paid into your bank account. And unfortunately, most of the time, this is a little bit less than that. Okay, cool. Let me quickly go and see if anyone has questions. Okay, no questions at the moment. Okay, let's continue. Okay, Balance of remuneration. Balance of remuneration. There is 3 types of balance of remuneration, or just called remuneration, which is called your PAYE remuneration, your SPL remuneration, and your UIF remuneration. Your PAYE remuneration is what your PAYE is going to be based on. Your SPL remuneration is what your SPL is going to be based on. And your UIF remuneration is what your UIF is going to be based on. Okay, PAYE and the SPL remuneration is normally work out the same way. How does that work? Again, the stuff that I've said is remuneration. Your income includes your salary, your bonus, your overtime, your commission, your leave encashment. Leave encashment is if you get a leave payout for retirement or retrenchment. That's the only time you can get a leave payout. Remember, the Act said employers should not pay you for leave. They should not pay you out. You get paid for leave, but you shouldn't be paid out. Okay. So that's your income and cash. Then we get our allowances. Allowances is money that we get that we need to use for something specific. I jump to the second one, which is your housing allowance, your cell phone allowance, your computer allowance, and then other taxable allowances or other allowances that the receiver of revenue sees as taxable. The first one, which I skipped, is your travel allowance. Travel allowance is worked out on a 20%, 80% rule. It's called the 80-20 rule. Don't know if it's really called that or if I just made that up, but it's the 80-20 rule. Okay, it means you need to calculate how much you travel for business purposes and for private purposes. You work out how much you travel for business purposes and private purposes. If you get a travel allowance, you must keep a record. The law is very clear on that. You need to keep a record. SARS will not accept any claims against the travel allowance or a use of a company car if there is not clear records kept. In that records, you need to record your total kilometers, your private kilometers, and your business kilometers. Then you go and you work out what is the percentage of your business kilometers. If your business kilometers is 80% or more of your total travel, then only 20% of your travel allowance is taxed. If your business travel is 80% or more, then only 20% of your travel allowance is taxed. If your business kilometers is anything less than 80%, then 80% of your travel allowance is taxed. Okay, saying that again because students make a mistake with this. If your business kilometers is 80% or more, then only 20% of your travel allowance is taxed. If your business kilometers is any less than 80%, then 80% of your travel allowance is taxed. Then you include your fringe benefits. The most common fringe benefits, there's a lot more of them, but the most common fringe benefit is a medical aid fringe benefit. That is where the employer pays your medical aid on your behalf, or the employer contribute towards your medical aid. Doesn't have to be all of it, can be a part. That's a medical aid fringe benefit. A retirement contribution fringe benefit works on the same way. Employer pays a part towards that. 80-20 rule of use of company car. And then SARS value placed on any other fringe benefit. Okay. And then after that, you can deduct your allowable deduction, which is your total retirement deduction, which is now your employer plus your employee contribution. Remember, your fringe benefit was employer contribution. So you include your employer contribution, and then you deduct both contributions, employer and employee. Okay. And then, as I said, you can deduct your donations limited to 5% of your remuneration immediately before your donations. That's how PAYE remuneration worked out. Income in cash, allowances, fringe benefits, minus allowable deductions. Going to give you a few seconds if you want to take that down. Is everything still fine? You can still hear me? Okay, cool. Okay, let's continue. That's your PAYE remuneration. Next up is your UIF remuneration. By the way, that was PAYE and STL remuneration. UIF remuneration exactly the same, except you can see I crossed out some stuff. UIF remuneration, the remuneration that your UIF is based on. You do not include commissions, and you cannot deduct any deductions. That's the most common differences. You do not include commissions, and you cannot deduct any deductions. No commissions, no deductions. Okay, how does tax work? Tax work on a sliding scale from 18 to 45%. Doesn't matter if it's PAYE or tax. It works on a sliding scale from 18 to 45%. The more you earn, the higher rate you pay. Incrementally. It doesn't mean if you earn a lot, you're not going to pay only that percentage. It's incremental. I show you now when we do when you look at the table. Rebates, like I said, depending on age, there's three brackets: primary, secondary, and tertiary. Primary, all natural persons. Secondary, or let's rather say primary plus secondary, is over 65 plus. Primary plus secondary plus tertiary is 75 years and older. Thresholds. Thresholds is dependent on your age. The threshold is directly linked to the rebates. Threshold is the tax-free portion, or the amount that's tax-free. There's three thresholds: natural person under 65 years, natural person 65 to 74, and natural person 75 years and older. Medical aid tax credits, it's a set amount every year, and it's based on the number of dependents on the medical aid. Guys, if you want these slides, you can send me an email on Monday to support@college.optimi.co.za, and I will happily supply these slides to you. Then you don't have to write everything down. You're more than welcome to send me an email, and I will supply the slides to you. Remember, I'm not going to send them out automatically, so you have to send me an email. Okay. 80-20 rule. I basically already discussed the 80-20 rule. Okay, the use of a motor vehicle. How does the use of a motor vehicle work? Because the use of a motor vehicle is a fringe benefit. I get the use and I get the benefit, but I don't pay for it. And the SARS says that's not fair. You have to pay, you have to be taxed for it. So now we have to determine, okay, so I have to be taxed for it. So what is the benefit that I'm going to be taxed? So there is a determined value for the fringe benefit. That is worked out in a certain way. It is the cost times the percentage minus the considerations. And then you times it by either 80 or 20%. Let me explain. First you need to know the cost of the vehicle. The cost of the vehicle is the cost that the employer paid for the vehicle, including that, because most probably the employer could not claim that on that car. So it's the cost is the price that the employer paid for the vehicle, including that. Then you multiply it by a percentage. This percentage can be one of two percentages, either 3.25% or 3.5%. 3.5%, this percentage will usually be given to you in the exam if you study ICB. 3.5% is used if there is no maintenance plan on the car. So the car does not include, the car was not bought with a maintenance plan. The maintenance plan has to be at least 3 years or 60,000 kilometers. So if there was no maintenance plan on the vehicle, you use 3.5%. If there was a maintenance plan on the vehicle, you use 3.25%. Okay. That gives you the determined value of the car. Then, as with any other fringe benefit, you deduct the considerations that the employee paid for it, for the use. And then you multiply it by either 80 or 20%, based on that same principle. Okay, so we get the determined value of the car, which is the cost, including that, excluding finance charges. Excluding finance charges, noted. So it's not the amount that you financed the vehicle for. It's the cost of the vehicle, including that. Multiplied by 3.5 if there is no maintenance plan on the vehicle. 3.25 if there is a maintenance plan on the vehicle. Minus the considerations paid for the vehicle. This part here, the determined value of the vehicle, is per month. Per month, it's 3.5% per month. Okay, cool. Great. Again, 90-20 rule, and that we already know by now. This is a typical tax table, and this is the 2022 tax table. You will be working on the 2022 tax table in most of your questions because we are not done with the 2023 tax year. If you earn anything from R1 to 216,200 Rand, you will be taxed on it at 18%. For everything that you earn above 216 Rand and 216,200 Rand, up to 337,800 Rand, you will be taxed on 26%. Anything above that amount to 467,500 will be taxed at 31%, up to 613,600, 36%, up to 782,200, 39%. up to 165,600, it's 41%. And everything above that will be taxed at 45%. You can see now, even if you earn 2 million rand per year, you're not paying 45% on 2 million rand. You're only paying 45% on 2 million minus that. And then you're paying 41% on 2 million minus the difference there. You see what I'm saying? So you're not paying tax at a higher rate on everything. Okay. And then that's not the end of it. Because after that, you get your rebate. Because this thing is based on, if you earn 1 rand, you pay 18 cents tax. That's what it says here. Effectively, if you earn 1 rand, you pay 18 cents tax. But remember that rebate?
Yeah.
Rebate comes into consideration. There's the rebates. Up to 15,740 rand tax. You pay nothing. So if the tax that we worked out on the previous page was anything up to 15,740, you pay nothing. There's every year before. That's if you, any natural person gets that. Person 65 and above get that one and that one. Person 75 and above get that one, and that one. Okay. So it doesn't mean if you're now over 65, you're now only in the secondary. You still get the primary as well. Everyone gets the primary. Okay. I just want to take you back to the previous one. What you might not understand. They always say, okay, if your salary falls between that per year, then you see this thing over here. Now that makes no sense to me. The only thing that this section says is if you earn in that bracket, you pay 26% on the difference between what you earn and the 260,200. And everything else that's left over is taxed. The tax on that 216,200 is 38,960. So let's say you earn 300,000 or 316,200, just to make it easy. That means 100,000 is above. You fall into this bracket, it's 316,200 minus the 216,200, which means it's 100,000. So on 100,000, you're going to pay 26%, which is 26,000. Now they've gone and they've said, okay, you don't have to work out the tax on the 216. We've done it for you. Okay, so effectively, you're going to pay 38,916 plus 26,000. That's not what you're going to pay. That is the tax based on your salary. But remember, the rebates come into play. So let's say, for instance, that was the 38,916 plus the 26,000 gives me about 74,000. 64,000. Yeah, around about 64,000. Okay, 64,000. So hypothetically, let's say your tax is 65,000. If you are a normal person in South Africa, which I suppose you will be, okay, you of that 60,000, 65,000, 15,000 rand is gone. They say, sorry, we don't want it. Keep your 15,000. So now it's only 40,000. If you are older than 65, another 8,600 is also free. And if you are 75 and above, then an additional 2,800 is also tax-free. So can you see that if you are 75, even if you are 25 years old, You're only going to pay about 40,000 rand tax on 316,000 rand income. So, yeah, people just say taxes. Yeah, we don't like to pay tax, but it's actually not as bad as we think it is. Okay. This is what's interesting. If you earn 87,300 rand, or anything above that, you pay no tax. If you own older than 65, but younger than 75, you can earn 135 rand, 150, no tax. If you are 75 and above, you can earn 151,100, no tax. Tax-free. How do they get to this? They take the rebate and they divide it by the lowest tax percentage, which is 18%. So 50,714, which is your rebate, divided by 18% is 87,300. Which means you can earn up to 87,300 rand without paying tax. So there's a lot of people out there that earn salary, but they don't pay tax. SARS does not even send them assessment or anything because they are below the threshold. And then above this, if you have one employer and you earn up to a certain amount, then you don't even have to submit a tax return. You pay tax via monthly PAYE, but they trust the fact that your taxes worked out so correctly that they don't even want a tax return. Yeah, you need to please email me Monday and I will send all this to you. Okay, let's see what's up next. I think we are pretty much, yes, another hour is gone. Okay, there is the medical aid tax credits. Primary member and first dependent, 332 rand. Second dependent and everyone after that, 224 rand per month. That means if you pay towards a medical aid and you are the only person on your medical aid, then you get a rebate of 332 rand or a tax credit. Remember that tax credit is from your tax. It is not a deduction, it is a tax credit, which means it is deducted from your tax, not from your remuneration. Okay, there we go. There we go. Okay, guys. Let's make this one a little bit longer. past. We take a little bit longer break now. I'll see you guys at past. That's 20 minutes. See you guys at 11. Then we are going to do some calculations and we should be finished by even before 1 o'clock maybe, but no later than 1 o'clock because it's Grand Prix and I want to watch it.